And thank you, Tony, for joining us for a few minutes before the actual ceremony begins. We're here because one of your portfolio companies, PBF Energy, is reopening a refinery. Now, this is a relatively small deal for Blackstone, about $450 million investment here at this refinery, but it's a big deal for Delaware. 500 union jobs are saved. We're talking about $100 million potential tax revenue for the state. You talk a lot about how you increased employment at your portfolio companies, and we got positive job numbers today. But what does Washington have to do at this point to get other companies to hire?
Well, I think one thing we need clarity of leadership. The uncertainty, the divided Washington, it creates lack of confidence. So that's one thing. Government needs to come together. Government needs to agree on jobs plans, not have budget crises, not have debt ceiling crises, not lurch from one crisis to another. That erodes confidence. We also need to create demand. To do that, you're going to need to put people back to work.
Now, you mentioned the jobs plan. What do you think of Obama's proposal?
I think there's a lot of good elements to it.
What are the good elements and what are the ones that you're not?
Frankly, I think anything to. I read somewhere that he's expecting to create 1.3 million jobs out of that. We need to do something. And, you know, personally, I would be prepared to investment spend to do that. And I personally think we should do it through infrastructure investment because that pays dividends to society for many years to come.
So you're in favor of government spending to promote growth?
I am.
Okay. That's not what every business leader is saying these days, so that's interesting.
Well, I worry about the deficit too, but I think we've got a short-term and a long-term problem. So I think you need to tackle both. But I think you need to spend some in the short term to get the country going again and deal with the longer-term issues rigorously.
Congress has proposed funding that jobs bill with a millionaires tax. Is that something, you know, what are your thoughts on that? Is that something that you would support?
I'm assuming in general that the affluent need to do more. And I'm on board with that. I haven't looked at the specific tax. I think some of the things that were proposed were really destructive. I think eliminating the deductions for charity would have been terrible for the charities of America that served our neediest. But you know, the affluent are going to have to do more, clearly.
Now, you mentioned confidence. That also impacts deal making. We had Carlyle announce a $4 billion healthcare deal earlier this week, but there hasn't really been much in the way of deal making. What's your outlook for the rest of the year and into next?
I think it'll be slow for a variety of reasons. Financing is much more expensive. If you look at the financing on that deal, it's PPD is 400 basis points over what it was 3 months ago at the caps. They haven't done the financing yet. Financing's expensive. Prices are down. If you don't have to sell your company, you don't want to sell it when prices are low. You want to sell it when prices are high. So the pipeline of deals is much skinnier, and I think deal making will be slow.
Sticking on deal making for a second, Europe is a really hot area for a lot of private equity firms. Blackstone recently, actually just yesterday, announced an agreement to buy a credit manager in Europe. Are you guys looking at bank assets?
Well, we've looked a lot at bank assets, but until the regulatory scheme gets settled, it's very hard to buy them because you don't know what the economics of the business will be. So we continue to look. Let me rephrase that, because that's banks. Bank assets, so selling out of the balance sheet, absolutely, we're looking at that, particularly on the real estate side.
There's some challenges there, though, right? Well, I know that you bid for Anglo-Irish's portfolio, but...
And we have a deal to buy a bunch of assets from Royal Bank of Scotland and things like that. So we're buying assets from the banks, clearly. That's one of the big opportunities. A lot of those are real estate-related assets.
Great. Thank you so much, Tony, for being here and for inviting us here, actually. And we hope that you come back again soon.